So today I thought about doing a video on Sunday. I normally don't do videos on the weekend, I normally have the weekends off, but I thought, you know what, with the week that we've just had, I think this is a good time to have a chat. Let's just have a chat about things and let's have a bit of a reflection off the last 12 months. And at the moment, obviously, there's the feel-good factor going on with the markets doing very well in the last couple of months, and obviously Friday we talked about DraftKings and their mega earnings, and the stock being up 85% year to date, and you guys that are on the Patreon and in the Discord, when the earnings came out, we had a bit of a party on the Discord when these earnings came out, and obviously the share price did really well. But I thought I'll come on to the reason why I thought this was actually a really good video to make, and what actually brought this to my attention. And by the way, if you do want to join the Patreon and join the party that's going on Discord at the moment after them DraftKings earnings, links in the description. And if you haven't done already, make sure you sign up with Trading 212. That's a broker that I use, and they're currently offering a free share worth up to £100 when you join through the link in the description. So maybe give that a go. But I'll go on to the image that kind of brought this video up, and this idea why I thought, let's just have a chat with kind of what's going on at the moment. So this actually came up on like a memory kind of app on my iPhone, and it was funny because a year ago I did the same video that I did on Friday, which was a review of DraftKings earnings. And you can see here me pointing out, DraftKings has smashed the Q4. And then you look on a year later from when I've made this video, and I've still, actually, if you look over on the background, you can see I've even still got the video up on the whiteboard. We're 12 months on exact to the date, and we're talking about Q4 once again is an absolute smash. And, obviously the last 2 months has been absolutely fantastic, and the market's been fantastic, and DraftKings has done absolutely amazing. But then you look at the share price in the last year, and it's just been so choppy. You've been up at $23, we're now back up $20. In that time, we went all the way down to $9. And you can see the share price is just all over the place. But realistically, when you zoom out into a longer term picture, 12 months on, you look at this going, so 12 months ago, they did absolutely fantastic earnings. And now we're 12 months on, we're at an absolutely amazing, again, earnings. And so when you look at the market here, why is the market, and this is just DraftKings as an example, but there's so many stocks out there at the moment that are just bouncing up and down and very volatile. When you zoom out and you think, well, 12 months ago we were in a good place, and 12 months later we're still in a really good place, even a better place. So why are we, so bouncing around on stock prices? And it kind of led me to this quote by Peter Lynch, and Peter Lynch is an absolutely amazing investor. If you never read any of his books, 100% you read some of his books, especially One Up on Wall Street. I think it is. I said I think it is. It definitely is my favourite book that I've ever read, especially when it comes to the terms of investing. And people forget this all the time. Behind every stock, there's a company, and quite often you get sucked into these share prices going up and down, up and down, up and down. That you've got to realise, this share price is actually for a business. And when you look at the business here, the business has done amazing. 12 months ago, the business was doing amazing. 12 months on, the business is doing amazing. But the share price is, like crazy. And it's only in the stock market where you get this, where you get crazy moves up and down, up and down. And realistically, if you look at the business has done well. And then through Q1, Q3, Q4, the business has been just nicely ticking up. And realistically, stock prices, share prices, if they were truly to reflect the business, share prices should just slightly move up. But for some reason, and probably to do with greed and fear, and this is why you can sometimes sell stocks for higher valuations what they should be, because everyone gets greedy. But at the same time, there's times where share prices get valued so low on businesses, and there's fear out there, and there shouldn't be that fear out there, because realistically businesses should be moving in line. But the stock market and emotions and the momentum of the market can make stocks go crazy high, crazy low, when realistically businesses should be going like that. And over a longer term, that's why it's key to not get sucked into where that stock's up, down in a few weeks, a couple of months. You've got to look at the long-term picture and look at how the business is moving, because under all these stock prices, there's a business. And if you look at the business for DraftKings, for example, in the last 12 months, you go, well, it was here in 2021 or the start of 2022. And now that we're at the start of 2023, the business is up here. It's moved positively in the right direction. Revenue has grown. It's moving more it's now got even more profitable states. The business has grown, and it should be reflected in the share price. But when you look at the share price, boom, 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 it's all over the place. And that's what's crazy about the stock market, is that you get crazy movements, but realistically, you've got to realize there's a business behind every stock. And this leads me on to probably my favorite quote of all time, which I've always tried to follow, is Warren Buffett. And Warren Buffett always says, be fearful when others are greedy, and be greedy when others are fearful. That is 100%, that's investing summed up. People try and make investing sound an absolute, really hard game to understand. There's all these factors to price in. But realistically, this is the big thing that you need to realize. There's times when you look at a business and the business can get priced to fear. When you look at the 10th of June and the stock was $10, and you look at this stock and it's at $20, half a year later, there's no difference in the business. Nothing's happened in the business for the stock to be then valued at $10 and then be at $20. There's nothing that is a 100% difference, 100% on the share price. There's no difference between where this company is valued at $10 to $20 to make that rapid change. Now, technically inside the business has got a little bit stronger in that time frame, but realistically there's no difference at all. The difference is that there's fear priced in June, and towards now, February time, there's a bit of greed. There's optimism getting priced into the stock. And if you go actually even further out, if you may look at the likes of January 2021, at that point you would have even more greed priced into the stock. It's the same business. It's the same business. Just at one point it's getting priced at greed, and then at one point it's getting priced by max amounts of fear. And it's crazy to see that investing is investing summed up. Buy when there's fear, sell when there's greed. And that is ultimately what can happen. And this is also the point that you can get good businesses, and the idea is to buy good businesses when there's fear, and probably sell. You might want to sell good businesses when there's greed, and you're like, okay, maybe we're getting a little bit carried away. And that's basically, investing summed up. And for me personally, I actually have quite a bit of an advantage, because for me, I get to see when there's max greed and when there's max fear better than a lot of people. And the reason why I get to see when there is max fear and max greed more than what every other person out there can do is because I run this YouTube channel. I get to see, I would say, around about 50,000 people's opinions on the stock market every month. That's quite a big selection pool of investors that I get to see in their opinions. And I could see, judging by the comments, I remember, at this time frame when people were saying, this stock's going bankrupt, sell now, it's going down to 8, it's going back down, it's going another 50% lower, it's a trash company, you shouldn't have bought this company. And I get to see now at $20 how it's exactly the same company. But everyone goes, it's an amazing business, they delivered financials, it's going up another 100%. Exactly the same company, but just because of the momentum, how people's opinions can change. And that's not what you want to be judging the share price off. You want to be looking past the share price and actually looking at how the company's doing. And it's just crazy. And this is also why a lot of retail investors just struggle in the stock market. If I have a look here, this is my stats for my channel. And if you actually look at January 2021, which is where the most people were interested in investing into stocks, that was actually near the peak of the market. That's when you look at like the Russell 2000, for example, that started, coming down first, and then eventually we had the S&P 500, probably around this time that started coming down a little bit. And you can see here, this was the top of the market. This is when you wanted to be selling, but that's when people were most interested in stocks. And then you look at the trends going downwards, and when the market actually started to bottom around June time, and that's probably the best time, for example, when we look at DraftKings, that's probably, we did have one dip in June, we did have a dip towards the end of the year actually as well, so there was two kind of bottoms in there. But you can see here, the two times when it was the best time to buy in stocks is you had the low in June time, and you had the low in December time. And this is it. This is summed up market emotion, and actually people ignoring what Warren Buffett says here. People that were saying, the best time to buy is when people are fearful, and the best time to sell is when people are greedy. And look at this is why so many people underperform the market. When people were getting greedy and you should have been selling, look at how many people were interested in buying. If you look at it down here, when this was the best time to be buying, the bottom of the market, funny enough, the exact 2 months where the lows were in the stock market was the lowest that people were interested in buying stocks, which is just absolutely bonkers. And you can even take this a little bit further. I would ideally like a little bit more months data, but it unfortunately runs out at June 2020. Ideally, if we would go to like March or April, it would have been even lower than this. Okay, but if you actually look here, we came out the CV boom and the stock market went on one of the best rallies ever. People weren't interested in stocks, but as the market rallied up, people got more and more interested until we got way overvalued, and that's where peak greed were. And it's just interesting to see here that even from the data that you can see here, how many people don't do that well in the stock market, and why investors underperform the market. You can see here, retail investors are buying at exactly the wrong time. And what's going to happen once again is that, we're near the bottom of the market now, and we'll see if it bottoms. But I can tell you this, when the stock market starts getting extended, when it starts getting greedy, what's going to happen is this is going to start going back up again. And for me, obviously that's great, because obviously I get a bit of an insight on how the market's going and what investors are feeling from this YouTube channel. But it's just a prime example that kind of sums up the market. And I just wanted to, on a week where we've been hit with obviously very positive news, stocks doing amazing, one of my biggest investments, when you do this, YouTube channel, it's always tricky because you're always putting your as soon as you commit to talking about a stock, you're kind of tied to that stock, and a bit of a big commitment, because you're not like a finance YouTube channel that goes around and goes, this is the broker that you want to use, or look at what Liz Truss has just done, it's absolutely shocking, or we're getting a new Prime Minister, they look at these changes to ISAs. To make them sort of YouTube channels, and I might offend a few people here, but they're easy. They're really easy channels. You have to just look at what's in the news and give your opinions. Being a channel that does investing and stock picking, and you don't hide your picks. Everything's out there on the table. Everyone can see your picks and then they can judge you. It is quite tricky when you do put your branding and your name behind a lot of these stocks, because they need to perform, or you get either a good reputation or a bad reputation. So it's obviously been a good few weeks where you've had such a big, through a bear market, you've put your name behind a company, and eventually it goes out and does well. Obviously that's absolutely amazing. But I wanted just to take this Sunday to step back after what's been a fantastic Friday, and definitely had the buzz all weekend after what has been an amazing week. Just a good time to step back and go, we need to reflect on this point and remember this point for when we go through future market cycles. We need to remember that these aren't just stock prices that we are investing in. While people were saying this company is a bad stock or this bad investment because the share price is down, you've got to remember that you're not buying into a stock chart, you're buying into a business. And also you've got to remember that the best times to always be investing is when the fear is out there. And then when the greed does start to come and you see everyone getting carried away, that's the time when you need to reflect and go, okay, we've been through this before. Everyone's buying this. We're seeing stocks that have no revenue, no profit, going absolutely crazy. We need to step back a little bit here and take a chill out. And when you look at investing from that point of view, it comes quite an easy game. But as you know, the day-to-day investing can look a lot harder than that. But when you look at it from that point of view, a longer-term picture, it does come a little bit easier anyway. So Anyway, I hope you enjoyed the video. I just wanted to mumble on about a few things and talk about what I've noticed in the last few weeks and just a bit of a reflection point really from where we are at the moment. So hope you enjoyed the video anyway guys, and I'll catch you in a bit.